Hello, everybody. How's it going? No music intro this time. Gonna go straight to something even more depressing than having to hear me sing. Hope everybody's doing well. I have lots to talk about with Ocular and with two other ideas that I want to talk about that I've never talked about on here. I've only talked about one of them on Twitter. And before I do that, though, I am going to do something that is very out of the ordinary for me. And I went back and forth whether I should do it or not. And I ultimately decided it was worth doing it. So I've never asked for money, gifts, anything in the decade I've been on Twitter sharing my ideas. I've had people try to send me stuff. I tell them I don't want anything. I've actually had two people successfully guess what hotel I was in once to send a bottle of alcohol to my room. Just very, very kind gestures of all the time from people I've met over the last 10 years on the internet. And I truly want nothing in return for doing these things. And I've never asked for anything. People ask me all the time what they can do. So I finally found something that you could do. If you have extra money and you don't like the money you have and you want to donate some of it, there is a very good cause that unfortunately has appeared in our community where I live. My kids go to a school, a local school down the hill, and my daughter Nora's teacher from a couple of years ago tragically had her husband die last week. And he was the breadwinner of the family. They have two teenage kids. She was just the nicest person. I don't know her socially, or I just see her when I go to the school to drop the boys off and drop Nora off. And it was truly a sudden, heartbreaking event with no notice. And they did GoFundMe. So I put the GoFundMe in the link at the bottom of this YouTube. And if you do give, please give anonymously, and definitely don't say anything about why you gave. Most people, nobody locally knows I do YouTube, so I like to keep it that way. But anything you can give would be great. And I appreciate it very much. She's a very good person. So with that very, very depressing intro, let's go to the stocks. Cowan just ended with the Ocular fireside. And so it's really fresh in my head. And they reported yesterday. And I guess we could start with the least important part first. So Dextenza, I was concerned Dextenza sales would come in below where the street's at, and they did. They guided to 55 to 60 million in sales, up 10 to 20% year over year. In January and February, they said sales were up 20% year over year. But I remembered, that last year there was the Omicron variant, and some of those sales were artificially impaired last year. So I'm not sure the 20% growth is sustainable. I don't know. The good news is that Dextenza is not the story here. I was never buying it for Dextenza. I was buying it for, there's a multiple of reasons why I was buying it, but Dextenza, I was hoping would reaccelerate. It has reaccelerated. It is growing again. I just don't know what that revenue stream is ultimately worth. It's very unlikely it's worth, $300, $400 million. It could definitely be worth $200, $300 million with the right partner or that can actually roll into their sales force. It's a very high gross margin, and it should have a pretty big moat as it gets sticky with doctors. So Dextenza is fine. That's definitely not why we own it today. We obviously own it today because of the TKI. And, everything I've heard from the earnings call yesterday to the fireside today just reiterates and reinforces the path here. So the concern going into the call with me was you would hear something from the FDA that would have given the company pause to go straight into a phase 3 trial. The FDA somehow pushed back in the meeting and said, we think you should run a smaller phase 2 trial for safety reasons before you go into a large phase 3 trial. None of that happened. If anything, the language out of the company's conference call regarding the wet AMD trial is that it might even be more inexpensive than they thought, based on the proposed endpoints and guideline they got from the FDA. They're not ready yet to tell us what that is because it's not finalized yet. Usually they get minutes, you get the meeting minutes, 30 days after your meeting. So it's probably still a few weeks away before they get, in writing exactly what the FDA wants them to do. They said something like they're in active negotiations with the FDA. All the language regarding the discussion with the FDA for the trial seemed very positive to me. Regarding partnering, they flat out said it's pretty hard to partner until you know what the trial is going to look like, what the cost is going to be. I think the exact line was the last question on the conference call, which you obviously should be reading these things and not just listening to me. But he said it's hard to partner until you have a working idea of what your trial is going to look like, and that makes obvious sense. Today, on this Cowen call, the most interesting thing that was said was that all the partners they're talking to, all of them, think they have proof of concept and are in agreement, that the drug is active, that it works, and that it should move into pivotal trials. He also said that they are far along in discussions, but he's not going to say they're necessarily far along in an acceptable term sheet. And he's not going to guarantee that they would have a deal by the end of Q2. Now, he says if they don't have a deal by the end of Q2, they can pause partnering, and they have access to minimally or non-dilutive financing to bring the diabetic, I can't say this word, the DR indication, we'll call it, to fund that, to self-fund that. But the very important part of this is that he reiterated, sometimes he hasn't done a great job from this front, that there is no secondary that needs to happen, or be a very, very small secondary, to get the company in the right place to launch in Q1 of 2024 a DR indication for the TKI. And let's make no mistake about it, this is a multi-billion-dollar opportunity a year in just that indication. And it's an easier pathway than wet AMD. But wet AMD is a bigger market. So he said, in the Cowen fireside, he said the NPV of wet AMD is higher, but it's much more messy and harder to get there. The other thing he said was basically partnering is just a question of when, not if. He goes, they can't do this alone. It's too big of an opportunity. And if they didn't partner in Q2 for wet AMD, then they would partner, later on at some path with the company because they can't do it alone. And everything that he said in the last 3 months just leads me to believe that they are, overwhelmingly likely to partner. Now, why isn't he, guaranteeing a partnership or why haven't we had one yet? So he has to show that they have a viable path to go it alone without a partner. And in this case, he says they'll do the, DR indication. If you don't have two partners fighting it out with you over term sheets, then you have to have a viable path to have any kind of pushback against whatever terms they're offering. He is negotiating with these parties in the public on these conference calls and on these fireside chats just as much as he is in private. So I would expect them to say regularly that they won't do a bad deal. Unfortunately, the last time I heard something like that was from Lionsgate, and they didn't do any deal. Now, I do not think that this is Lionsgate. The beauty of this idea is that it doesn't matter where interest rates go. It doesn't matter where the stock market goes. The people that they're talking to will have no movement away from the table because it's such a rounding error to the size of the companies they're talking about. I mean, we're talking about a few $100 million investment on companies that are 50 to $300 billion, and they don't make decisions based on anything to do with stock market movements or interest rate movements or anything. So it's not even a valuation decision so much as they probably have to get to the point where the most important people in that large pharma company believe this product has a decent chance of working. And you just got the 10-month data 2 weeks ago, 3 weeks ago. So these things take time to play out. And I would be surprised if we got to the end of May without a deal, even the end of April, even. I would think we probably would have a deal. I think it can come together pretty quickly. And, I haven't sold any stock. I've bought more. I bought more yesterday, bought more last week. I didn't buy any more today because I was huge in it. I will say again that your main risk here is that something pops up in safety in the DR phase 1 trial that's running now. And that would just be a deal killer. I mean, the stock would go down 50% or more if that happened. I don't think that's likely, but whenever you're having something that has a small n, with current dosing, it's definitely a possibility, and definitely a possibility. So I think that's pretty much it for Ocular. The fact that we don't have to worry about second. Oh, there is one thing that I found that I think is, which blew my mind, is that Ocular is not in the XBI. The XBI has some weird funky rules where if you get below like $300 million or $200 million in market cap, they boot you from it. And then when you get to between 400 and 500 million with a free float, they put you back in it. And it's a quarterly thing that happens the third Friday of the end of the quarter. I have not been able to figure out yet when the cutoff date is. That's just the day it's rebalanced. I don't know the date they check for the market cap. I also don't know how they define free float. If it's just, if somebody owns 12% of the company, if that's not part of the free float, I mean, technically it isn't. But Ocular is very close to being added back to the XBI. If it doesn't happen this time, it'll definitely happen after they get a partnership. And it's a huge, huge tailwind. I think I calculated something like as much as 7 to 10 million shares would probably have to be purchased on 70 million shares outstanding, something like that. Just a huge tailwind. So we'll see what happens with that. But Glenn offered congrats on FOCS. I did not pitch FOCS on the YouTube though. I was going to do it on the Friday before the deal happened, and the deal happened on the Monday. So I can't really take a victory lap on something that I never went on here to talk about, but that was a winner for me. There's no reason to really discuss it or explain why. However, the first new idea I want to talk about, which I actually didn't even tell you about, Glenn, because it's fine. It's not the best idea I ever had, but I bought it yesterday, and it's just a rate of return trade. So XM is the ticker, X-ray Mary, and this one is very much like all the other ones that I've discussed in the past. So this is like Fox, FOCS. This is like CNR. Basically, XM has a majority shareholder, SAP. They announced, this is not going to be too long of a pitch, don't worry. They announced back in January they wanted to sell the company. SAP wanted to exit. Silver Lake, who owns 4% of the company, put out a 13D in early February, saying that they are prepared to bid for XM. And then yesterday morning, we got a 13D from Silver Lake and an 8K from XM, saying that they have agreed in principle on both sides to purchase XM at $18.15 a share. And they've entered into an exclusivity agreement with Silver Lake until March 15th, which is just 10 days from now or 9 days from now. Importantly, the 8K and the 13D do not mention due diligence or financing as a gating factor in getting this deal closed in the next 10 days. It just says basically documentation. They have to finalize documentation, and they have until March 15th to do it. Now, why did they have to put out this information now? Why didn't they just tell us in 10 days? It's the same thing as CNR, and it's the same thing as FOCS. It's basically a company, somebody that already owns a large stake that had a 13D outstanding. You have to update the market and do kind of a market test. It's not a market test because SAP has 70% of the company, and SAP decides on a sole vote whether or not this goes through or not. And SAP has already decided that they're okay with the $18.15. Okay, the price is already agreed upon, but they had to do it legally just to have complete sunlight on this because Silver Lake, owns 4%. Okay, so this is a long about way of me saying I think there's like a 99.8% chance that this goes through at $18.15. It would just shock the living shit out of me if this broke. If it did break, the Financial Times reported that there were 2 other bidders for the company. They didn't say what price. And I would assume that SAP would then go ahead with one of the other bidders. So I would assume your break is not a disastrous, $10, $11 a share. Here's the trade. It's not really a great trade anymore today. But if you have cash, it sure beats cash. So the trade that I put on is I bought common and I sold March 1750 calls against the common. Now I paid like 17.30 for the common, and I sold the calls for 30 cents. So I am going to make, assuming this deal goes through, 20 cents on the common and then 30 cents on the covered calls. So I'll make 50 cents on a $17.45 stock for 11 days of holding this thing, which is just an insanely good return. It basically comes out to like a 2.5% to 3% gross return for holding this thing for 10 days. And today, the covered calls are not as expensive. You're probably only going to get 20 cents or 25 cents for the covered call. So I'm not sure. Before I started the YouTube, they were bid 30, offered at 35. The way to look at it now is, where does XM trade on a definitive deal? My buddies who know much more about this stuff than I do thinks it trades somewhere between a 40 and 50 cent discount from 18.15. So that gets you to 17.65 to 17.75, which means right now at 17.45, you have a 20 to 30 cent gain on the current price, which is about 1 to 1.5% gross return. Not nearly as good as 2.5%, but 1.5% gross return for 10 days, annualized is 50% annualized, something like that, 30 times 1.5. So again, I think there's extremely low risk here. I keep an eye on it. Markets like this, you see it was trading over 1750 earlier today. Now it's 1745. I would check it out. Keep an eye on it. The other idea that I have talked about on Twitter, but I haven't talked about here, is WWE, World Wrestling Federation. So I made this a pretty big position, and it has not gone the right way for me. I'm very intrigued by it. So Andrew Walker, yet another value podcast. Andrew Walker, he also has a blog. You can Google it. It's yet another value blog, I think. Did a write-up on WWE a few weeks ago. And, the crux of what he said really resonated with me, which is that this is an asset that people are paying, I don't know what it is, $500 million a year for the television rights in it. And, they pay, $4 or $5 billion a year for the NBA television rights. And you could buy the entire WWE if you're a major media corporation, pay 8 or 9 billion, and you'll own the television rights or the streaming rights for life. Even at 500 million a year, forget about the fact that it also is profitable and it makes a bunch of money. You can really pay back that 9 billion or 8 billion pretty quickly. And again, it's a moat business that has no competition. it's live sports. And the reason why I like it is Andrew paints a pretty good picture that I think at like that $9 billion level, it would be something like mid-20s times EBITDA. And for this kind of asset that is, it's so competitive for content and for sports rights that it just seems to me that literally everybody would want to buy this. Now, where is the pushback coming from then? Well, first of all, WWE is a little controversial. Some brands like Disney or Apple might not want to be associated with WWE. I don't know whether that's true or not, but you don't need Disney or Apple to buy them, right? Someone like an Amazon, a Netflix, a Comcast, it's kind of a game-changing thing to have this amount of intellectual property all your own forever. The other likely buyers, I'm going to jump all over the place with this. The other likely buyers are the Middle Eastern funds. So Saudi Arabia, Qatar, they've all been rumored to want to purchase large sporting teams, large sporting events, and Saudi Arabia has been heavily rumored to want to buy WWE. So why is the stock 81.75 at the lows since they started this process? I could answer that one pretty easily. So since the process began, there has been no public rumors or leaks of any potential buyers. No media companies have been leaked that want to buy it. And in fact, the only buyer that people thought was likely, which is Endeavor, publicly said that they're not going to buy it. Now, this is pretty funny to me because Endeavor only has a $10 billion market cap, and Endeavor was never going to buy WWE. So the fact that it would go down on Endeavor saying that they're not buying it, it just seems just totally foolish to me. What has been overlooked is that in the Bloomberg article that came out 3 weeks ago, saying that Vince McMahon wants $9 billion, he's looking for $9 billion, which is like $115 or $120 a share, by the way, maybe even more than that. It says that there's been multiple bids received already. Not one, but multiple bids, okay? Did not say who they were from. So we know that there has been interest in the asset, and we know it's for a price higher than where it's trading at. So if we know there's interest in the asset, and we know the asset's highly desirable, what's the issue? The issue is that skeptics think Vince McMahon never wanted to sell this. He just wanted to get back in charge, and it's a fake process so that he could get back in charge and keep running his baby. This doesn't make any sense to me because he has super voting power, and he could have put himself back into power at any time and not run a process that will go nowhere to stay in charge. I think that he is right, that this is an opportune time to cash his chips in. The media rights are due for renegotiation in 2024. He has a stake that's worth billions, and he's in his mid or late 70s. And especially if it's a buyer like Saudi Arabia, they can keep him running the show. There'll be no CFIUS risk to a Saudi Arabia or Qatar buying an entertainment company. And I don't believe there would be any antitrust risk for any of the large media players to buy them. How could you possibly sue to stop WWE being exclusively on Netflix or being exclusively on Amazon? It doesn't make any sense to me how that would be a viable lawsuit. So it's 81.75. The stock was in the mid 70s, low to mid 70s before Vince came back and said he wanted to do a strategic process. You have the media rights being renewed next year. You have a WrestleMania that sold out instantly at like record high prices. And I don't know what your break is here. Your break is somewhere between 70 and 75 versus 81.75 where it's trading. And your upside is 100 to 120. And I have been thinking there's a 65% chance the things get sold. Now, there's been no leak in the last 3 weeks, no article since the last Bloomberg article, and people are obviously fatigued. And, I get that. But what's interesting about this one is this isn't an LBO. You don't need the financing markets to be there for this. The buyers are going to be all huge media players or a Middle Eastern country. So I like WWE. I realize that it's risky and I've already taken a decent loss on it, but I added today and, I'm sticking with it. So that is that. Groupon. Now, don't worry, I did not buy Groupon. I did buy a very small amount of calls that I've already lost over half my money on. I cannot wait to see what happens with Groupon. Groupon has been due to report earnings for 2 weeks now. There's nothing, no news, no press release for earnings date. Something either really bad is going to happen or something really good is going to happen. It's more likely it's going to be bad because it's Groupon, but keep your eye on Groupon because that has a lot of moving parts there because you have the activist now that's on the board and he has a 20% position. So I am not putting in cash into Groupon, but I am very intrigued by Groupon. MX is, the same piece of shit it's been for 2 years. I own my full position still that I had from, a month ago. I bought a little more. I don't even know what to say about it, except that I'm of hope that in the second half of the year, the business ramps up from, both Samsung and from the Chinese customer. You don't need a lot to go right on MX to get the stock to double. So I think it's still that kind of great setup to where you have, $1 or $2 down and $5 to $10 up. I just don't think it's going to happen anytime soon, the upside scenario. But, the lower it goes, they're not buying back enough stock. They're buying back like $3 million a month, $2 to $3 million a month. It's not enough. But the lower it goes, the more stock they'll buy back. And I'll add as it goes lower. So it is what it is. That's one of the more depressing stocks in my whole career, quite frankly. LGF, John Wick media blackout was yesterday, and they say that John Wick 4 is going to be the best John Wick of all time. Everybody says this movie is going to be fucking amazing. So that should do gangbusters at the box office. So that's de-risking, and thank God, finally something in that stupid stock is de-risking. So that makes me happy. AMPY reports earnings, I think tomorrow or Thursday. And I have some sleuths that keep track of where the boats are around their pipeline. And my sleuths think that they're done with the repairs. They don't know for sure, but they think they're done with the repairs. So if they are done with the repairs, that should be a nice surprise tomorrow. I think it's tomorrow when they report earnings. And I'm sure you saw, or people that follow AMPY saw they got $80 million in a settlement from the boats, which is $2 a share and earn it, $2 a share, which is huge. And I wasn't counting any of that. So very happy about that. I think that's about it. Any other questions? I saw Paul asked about SMMT rights. I have no interest in that. I did see it was a gigantic rights offering that they did. And I would have expected them to buy, I would have expected the management team and the insiders to exercise in full. That's how rights offerings are usually set up, to where you're incentivized to always exercise. If you don't, you're going to get, massively diluted at very bad prices. Any opinion on free? I have absolutely no idea what that. I'd never even heard of that ticker before, Paul. Sorry. I don't even know what erythritol is. I like the ticker free, though. I wonder where they came up with that. No need to apologize. I'm still big in Cure. Oh, Phil. I don't know why I called you. I don't know why I called you Paul. QURE. Just sitting around waiting for that Huntington's data in Q2. We'll see what happens when that gets released. AYX did a huge debt offering with no convertible. They raised like $450 million with an 8.5% coupon, which is great news. They'll be able to pay off all of their 2024 convertible and remove any kind of cash overhang that they might have had to pay off that debt. Of course, it does mean they're not going to sell themselves in the near term, but that debt, if it's not a convertible, will not at all impede their ability to sell the company if they want to. ARDX, I mean, what a champ that thing's been. What else can I say? I have no idea whether it's going to be a 2-month or a 6-month review. It's probably more likely to be a 6-month review. I think it's highly likely to be approved. I bought a little common in ARDX, and I still have all my call spreads for Jan 24, though the overall position's a smaller position. It's just been a huge winner. I'm very pleased the way that that's turned out. And to be clear with XM, I'm not going to hold XM past the signing of the definitive date. When the spread's 40 cents or 50 cents to close, I'll exit. The idea was to make 2%, 2.5% in a 10-day period. NCR has been pretty weak since they reported earnings. I was upset about the top line guidance. This is supposed to be a business that was supposed to grow mid-high single digits, and it's going to grow 2%. My whole position there is in spreads, but it's a big position. And, it's been weak. The market's been weak. A day like today, it's down 1% and the market's down over 1%. So it's not like it's exceptionally weak, especially because it's levered. I don't think we're going to get anything in NCR until the debt markets open up and we get closer to the spinoff. I don't think they're ever going to spin the company off. I think the whole company will be sold, or maybe a division will be sold, and then the other division will be sold. But it's much more likely the whole company is sold. But you can't do that until the debt markets open up. And there's no LBOs happening. So, and XM is not an LBO. I'm sure there'll be minimal debt financing there. It'll probably be some direct lending, and it won't be nearly the kind of debt that you need for NCR. By the way, the debt markets might not open up for a couple of years. I thought they'd open up this year, but if you keep, hearing what Powell's saying, and if inflation doesn't get under control, you're going to keep seeing financial markets deteriorate. So it's hard to own that one in this environment. So I'm all spreads, which kind of sucks because most of the spreads are 28 strike and 30 strike, June, October, and January. And, we're getting close to June. So it's going to be hard to see that above $28 in June, absent a deal. But I'm not taking them off. I'm down on them now. But I wouldn't put them on today, that's for sure. All right. Well, thank you, everybody. And thank you for listening to me pander a little bit about the GoFundMe. Again, I never thought it'd be something I'd ever do. I would never send it to my friends or family, but I feel like I can send it to you guys because, it's just a way for kind of, if you want to give back, you can give back that way versus, paying me directly. And if I've lost you money, which I probably lost many of you money, specifically on things like MX and the CVR, then I wouldn't expect you to want to give me back anything. But it's all been done with a good heart and with good intentions. So everyone take care. It's been a good year so far. I don't like this market right now, but let's hope we get an Ocular partnership in Q2. And I'll be back again when I have another good idea. Everybody take care. Take care. Bye.